It's now around 8 hours since I recorded the previous video, and in those 8 hours the sentiment has changed. If you can tell the difference between the chart last night and the charts today, you can actually really pat yourself on the back because we've actually broken this trend line here. Okay, what that now means is there's another tick in the box for a bearish movement rather than a bullish one. Okay, now this may be a fake out like down here. Okay, we broke through this trend line only to recover. Okay, it may be another situation like that here, but at the moment what the chart is telling me is that there is a danger that we will continue our bearish outlook as opposed to our bullish outlook, which looks very confident last night. Last night we were above this liquidity zone and we looked set to continue on higher. We were playing around with this liquidity zone here. We failed at that one. We then failed through liquidity zone and then failed another trend line only to stop around this level, okay, to continue on up. Now there is an interesting phenomena where prices around a liquidity zone will test most of that area. Okay, so if you had a stop loss on this, I would be putting it quite far away from that trading lane. Okay, because what happens is institutions use retail traders' trades in order to get their liquidity. Okay, so if you had a stop loss on this trend line, okay, that would be the perfect entry for a larger, more informed trader to come along and say, there's a sell limit on the trend line according to the order book. I'm going to set my limit there, so if the price moves there, I will get that person's stop loss. Now this won't be deliberate, obviously. All they are doing is taking advantage of the liquidity, and if you are a trader, it is a dog-eat-dog world, so you'll be doing exactly the same thing rather unemotionally, because you don't know whether that person is going to be taking profit at that level or whether they are making a loss. Okay, well, there's no way to know that other than by, but there's no way of knowing it, basically. Okay, maybe you could ask them, maybe you could tell from the trading parameters, I don't know. But if you're bringing your emotions into the trading room and thinking along those lines and not really wanting to help people lose money, then it's a bit of a dangerous game, okay? Because trading is a zero-sum game. In order for you to win money or to grow your account, someone else has to lose, okay? That's the way that trading works, okay? And as long as you enter the trading arena with that knowledge and that foresight, you can make as much money as you want to and lose as much money as you want to. And that's quite important, okay? So your trading losses are going to be giving other people with higher skill sets your money. And if you win money and if you win trades, etc., okay, those wins are going to be coming from someone who's ultimately paying for them with their capital, okay? If you don't like that, then it's probably time to not continue with this course and continue trading. But everyone who enters this market is aware of the fact that, this money doesn't come from nowhere. Okay, it is always from some other trader's accounts. All right, so let's have a look at this now. So we're underneath this trend line. That therefore is now resistance as opposed to support. So therefore it fuels the hypothesis that we are going to see a descent. Okay, any trader looking at this would now realize that the sentiment has switched, at least on the short term, on the 1 hour chart, to a bearish outlook as opposed to a bullish outlook. Now, as I say, this could break higher still, okay, and then correct all the way up here and then still be bullish, in which case this is a fake out. But I hope you see the granular approach that needs to be taken with cryptocurrency trading as opposed to just setting your perspectives on one position. You can change your position probably on hours or even minutes under some circumstances, okay, especially if there's high volatility, and I'm going to be showing you some of that high volatility in this video. This video is specifically going to be talking about scalping, okay, which is where you sell out profitable cryptocurrency only to buy it back a short while later, okay. Now, scalping is not about big, large, impressive trading. It is about selling out at a small profit and buying back slightly more of the same cryptocurrency using the same amount of capital, okay? You're just accruing coins here for free. You're not looking to make, millions and millions on one particular trade. I also don't scalp with any margin whatsoever, so I'm spot trading. I'm not using margin, I'm not using anything else. It is literally just taking profits and buying back with those same amount of profits or same capital. I'm going to be using Dragon Chain for this, which is a cryptocurrency we've met before. Okay, I should say the price is currently 14 cents. It was, when this trade actually took place, closer to 35 cents. Okay, so we have had a significant sell-off of around 50%, but that has matched the general market. Okay, so there's nothing untoward about this at all. This is just a standard correction for Bitcoin. The entire market capitalization dropped as a result. Okay, and it is a standard drop. Okay, I still own exactly the same amount of Dragon Chain that I did when this trade took place, and I generally perform a scalp maybe once every 2 weeks or so. I'm going to show you 2 scalps in this video. One is a rather grandiose, slightly aggressive scalp, and the other is a smaller, modest scalp, both of which were profitable and both of which were risk mitigated and followed the principles that I'm going to be teaching you in this video in order to grow your account effectively for free. Okay, the first scalp yielded around 1,100 Dragon Chain, so around about $340, $350, maybe even closer to $400. Okay, the second scalp was a lot more modest. It was only about 300 to 400 Dragon Chain. Okay, but the idea is you can do this frequently. Okay, fast and frequently, but with small amounts of risk. Okay, you're not waiting for the market for any longer than, I'd say, 24 hours to come back to your position where you buy and sell. Okay, so let's look through the specifics of the trade. I'm not going to be paying too much attention to the actual price of the token during this because I'm trading it in Bitcoin, and therefore the prices are all in Satoshi. Okay, you can have trades where the actual price of the token in dollar terms increases, but the Bitcoin amount decreases. Okay, and one thing you need to pay attention to is the 2 assets that you're trading. Okay, which is why I'm starting this video by looking at Bitcoin. Okay, because I'm going to be trading. I will be doing a live scalp at the end of this video. I'm going to be trading Bitcoin against Dragon Chain. Okay, so if Dragon Chain is stable, but Bitcoin increases or decreases, that means my scalp is going to be effective. If Dragon Chain drops, but BT stays the same, obviously, I'm going to be buying back in. If BT stays the same but Dragon Chain increases, then I've got a risk situation on my hands where I might not get back in the market. Okay, and ultimately you want to be in the market for those big bullish movements, but selling out on volatility after those big bullish movements is really important if you are looking to scalp. Okay, so you need to pay attention to multiple things. Keep in mind the dollar price in the back of your head, okay, just in case something dramatic does happen and the entire market cap does drop. Okay, you'll notice there's quite a large discrepancy between the Satoshi price of this video and the live Satoshi price. Okay, next, keep in mind the 2 cryptocurrencies you are trading. So if you're trading against Ether, for example, you'd be watching Ether. If you're trading against Bitcoin, as we are in this video, you'd be watching Bitcoin and thinking about the volatility and how it's affecting your potential price. Okay, but let's look at the actual trade confirmations themselves. So I sold out on the 13th of April, roughly around 11:30 in the evening, around about 10,000. Let me just have a look at the exact amount. 10,090 Dragon Chain, okay, on the 13th of April. Okay, I got an average price of 535 Satoshi. Okay, so that was the total amount, and I bought back several hours later on a limit buy at 475. Okay, and that actually took place at, there's no date on that, bear with me, so 11:38. Nope, pardon me. Okay, so it's this trade here. Okay, so I'm selling Bitcoin. Okay, so it actually took place on the 14th at 7:10. Okay, so that's the trade there. And you can see there the average price was 475, and I bought back 1,190 in profits. Okay, so roughly 11,190. So 1,100 in profit, and I didn't have to buy any more. It was just the volatility that helped me do that. So let's look at the chart and see what signals I had. Okay, so you can see this green candle here. Okay, now bullish volatility is always going to be helpful for you if you're scalping. Okay, this movement had been huge. It'd gone from 400 or so, okay, from lunchtime on the 13th of April to almost 535, 540 even, okay, 550 by the evening, okay. That is a clear signal that something is going to start selling off sooner rather than later. Either it's going to continue or it's not, okay. And obviously, as you can see, we're at a liquidity zone here, okay. So that was my signal to sell, okay. That was my signal there to sell. Now, how aggressive do I be? Well, I'm going to put my limit buy at the next available liquidity zone, which technically would be kind of here, okay. But I thought, well, that's such a huge movement, I might as well see what I can get out of it, and I lowered it to 475. Okay, so let's just lower that down slightly, actually. So that's there. Okay, so those liquidity zones there, okay, I actually enabled me to drop that down and enabled me to actually capture that volatility itself. Okay, so by 7 a.m. the next morning, I was actually back in the market, having bought a comfortable amount of Dragon Chain back and profited 1,100. Okay, so that's a quite aggressive 60 Satoshi movement. Okay, and it's only aggressive, it can only be as aggressive just because we had a massive green candle before that. Okay, this is an hour chart, and obviously we climbed in the space of an hour from, where do we have the open? Okay, the open was 411, so we were at 411 at one point, and we were also simultaneously at 532. So in the space of an hour, we climbed over a good 150 Satoshi or so almost. Okay, so it was only because it was so volatile that I felt I could set such wide parameters. Okay, if we look at another scalp, which is a lot more conservative, this is more recent. This happened on the 30th of April into the 1st of May. And if I go back to my charts, you can actually see that. Where are we? So I sold my 11,191 Dragon Chain, and I sold that for 582 Satoshi. Okay, and then I bought back. I actually bought back 11,508 Satoshi. Okay, for 565. Okay, so this is a lot more conservative. Okay, we still did get quite a big movement, but then if you actually look at the grand scheme of things, if you actually look at the overall chart pattern, you'll see we are really high here. Okay, so you feel relatively confident of selling, but you never know whether we're going to see another high achieved and we're going to start taking off. Now, interestingly, the 30th of April into the 1st of May was kind of an interesting time for the markets. We'd started to see a sell-off in Bitcoin, okay? So who knew what could happen? Obviously, a sell-off in Bitcoin could push the price of Dragon Chain up, okay? Because Bitcoin's getting cheaper and therefore the price of Dragon Chain could increase. Also, at the same time, alts can move in situ with Bitcoin. So if Bitcoin starts to sell off, then Dragon Chain could also, and that's actually funny enough what has happened since. Okay, we've had this nice descent, which has meant that more people can now dollar cost average in and actually get a position. But if you see here, the volatility up here, this trade was really on its own. It stood out as being a nice big bit of volatility in an otherwise sparse area. This was more interesting because we were at a liquidity zone where theoretically we could have gone higher. So I lowered the risk and there was only a small trade there. In actual fact, that would have been another great opportunity on the 5th of May to have a short-term trade out of that wick here. So effectively with scalping, you're wick trading. You're looking for the volatility and you don't want the price to start moving away from you too quickly because then you won't get back in the markets. Okay, there's always that risk that you won't get back in the markets. Okay, so let's look at the current price action because there is an interesting thing happening here. Notice the price has dropped fairly considerably. We're now down at 370 Satoshi. You're not really looking at that though. You're just kind of looking for the volatility. You're looking for opportunities for movement as opposed to buying and selling at the right price. You know, why would you sell something at 370 when you traded it at 582? Well, it's to buy it back at a lower price. Okay, so the price is always contextual as opposed to anything else in these scenarios. Okay, so let's have a look here. So we are in a kind of bearish confirmed descent. Okay, so if I were to look at this, here is our trend lines. Okay, and now I've drawn a middle one here for ease of use, because it can be useful sometimes not to use the extremes of a trend channel in order to scalp. Okay, so if I were to set a limit buy, it would probably be erring on the side of caution and going through this middle, if at all. Okay, obviously looking always for the next liquidity zone. So if I were to trade this, I would say buying at 345 would actually be really nice and appropriate. Obviously we're at 367 at the moment and dropping nicely. Okay, we've ricocheted off of this top trend line in the channel, and I fully expect that at some point we'll probably tap the bottom one again at some point in the future. Okay, so rather than look to make all of that movement, and potentially, you know, we might tap here and then start to climb and I won't even get back in the market, we're going to be looking to err on the side of caution with this. Okay, so we are in a descending trend channel. What did I say about Bitcoin at the beginning of this video? Well, theoretically we could see it break higher here and continue, or it could come down. Okay, in either scenario, Dragon Chain is likely to have a sell-off as opposed to climb. Okay, obviously if Bitcoin gets more expensive, then Dragon Chain will reduce, but if the price of Bitcoin starts to come down, then Dragon Chain is probably going to match it, just because of the general consensus that it has done and has correlated with Bitcoin since we started to see this nice sell-off. Okay, so I'm actually going to sell 20% of my Dragon Chain holdings. I own around about 50,000 or so Dragon Chain, and I'm going to sell. I'm going to sell 10,000, my 11,191. Okay, and I'm going to sell them at 367. I'm going to market sell. Not really worried too much about getting the inaccurate price. So I've actually bought a little bit more in the demos since then, so I've actually got 11,718 Dragon Chain that I'm going to sell, and I'm going to sell those at market. Okay, because I just want to get out of the market. I'm not particularly interested in the exact number that I get. When I fill this order, it's probably going to take up the orders all the way down to 364. Okay, so this is a riskier scalp. Okay, it's not exactly textbook, but I still think that given the amount of resistance that we have here, and obviously we are nice and high at the moment, and we're also interacting with the liquidity zone and a descending bearish trend line, okay, I think that justifies enough of a movement to get back in. Okay, and you can always end a scalp early. Remember, you can always end a scalp prematurely just by buying, market buying. Say for example, if this afternoon I noticed that the price had come down to my limits but just missed it, okay, I could always just buy back in. All right, so I'm going to sell those live. Let's sell that dragon. Great. Okay, and if we have a look at our order history now, we've got that sell. Okay, so I've sold those dragon for a collective 365. Okay, the average price, because obviously when it goes through the order book, it will sell different amounts at different prices. Okay, so my average price was 365 Satoshi. Okay, now I'm going to set the limit up. So what price should I set my limit up? Well, I think that this has more of a probability of continuing than not continuing. I don't think we're going to be breaking out here anytime soon, and if we do, it's going to be a short-term wick that is very quickly sold off. So I'm going to set my limit basically bang on this trend line. I'm going to ignore this liquidity zone here because I don't think it's really that strong enough. Okay, it doesn't really have much of a history behind it. Yes, there's a little bit of it here. Okay, but again, it's not really much of an interplay. Okay, so I don't think that's going to pose that much resistance with this liquidity zone here. I am, however, not going to set it at the ultimate bottom, which is, 270, just because of the historical context of it being, relatively cheap down there. Okay, and I also want to get in and out of the market on relatively fast frequency, so I'm actually going to set it at 325. Okay, which is this zone here, which we have interacted with a little bit before. Okay, and there is some liquidity there. Okay, it's also around about 40 Satoshi less than where we are right now. Okay, so I think that's a relatively comfortable limit to set. Okay, so we're going to type in our limit, which is 0 and 5 zeros, 325. Click 100 because I want to buy back all of my dragon chain. I'm going to get 13,150 dragon chain. I'm going to click buy, and that will add our limit to the limit order. Okay. Now all I have to do is wait for the price to descend to my limit in order to get it filled. I can actually see the price is descending already. It's almost at my average price that I sold anyway, so it's going in the right direction. And if I go back to trading view, I can actually see the trend line intersecting here. I've actually set a limit on this, okay, an alert, okay, to make sure that I am notified if the price does cross. I will show you how to do that briefly, okay. So if we have this here, so if I actually click on edit, you can set the parameter, the crossing down, okay, so which way you want it to go, cross down, the value, which I've put at 325. You could set that a little bit higher if you wanted it to, just to be notified, say for example at 330, okay. If suddenly the price comes down to 330 and you're in profit in your scalp and you just want to buy, then that's fine. You could just do a market buy there. So I'm going to actually set it at 330. I want it to only happen once. I'm going to set the expiration time for a month's time, even though the trade is only 24 hours, but it's good to have alerts on for longer than you think you're going to need them for. And I'd like to be notified by email, okay? So if I'm away from my desk, I'm still notified. I click save, and that will now set a target of 330 Satoshi. So if there's suddenly some volatility to the downside, I will get a notification by email letting me know that my order is almost been filled, or if I set the limit at 325 that my order has actually been filled.